in some ways coming to the realization that, stablecoins are in part about bank deposits, and they're about banking everybody and everything, sort of the internet becoming a bank.
All sort of tend to fall into, two buckets of quality assets, which is something that, we feel like we've been missing for so long. We've got Bitcoin, we've got ETH, now we've got stable coins and yield on those stables, but the long tail of assets in crypto are just not investable.
Welcome back to The Roll Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face to face with the leaders of our industry.
Sit back, relax, and enjoy today's episode.
All right, Andy went to go jump out of a plane, but instead we've got Will from Galaxy Digital, Galaxy Ventures arm at Galaxy Digital, to chat about capital allocation in 2026 and beyond, with gold ripping, central banks dropping the dollar, accumulating metals and Bitcoin. Like, the big question is whether or not we're going to get the catch-up trade on Bitcoin and the tokens. Will, you're a friend of the show. You've been here before. Welcome back, man.
Thank you so much. Exciting to be here in 2026. I think this will be a good year for everybody who's listening to the show.
Absolutely, man. Well, you guys had a great year in 2025. Like you were saying behind the scenes, you guys had some key themes that, I'm quite curious to see and hear whether or not you think those are going to roll over, or you think we're going to get, a fresh set. So tell us first, what went well in 25, what didn't go so well, and then, we'll look forward to 2026.
Yeah, I think, we set out with the start. I think last time we chatted on the podcast, we talked a little bit about Fund One, the fundraising process, transitioning Galaxy from a balance sheet investing firm and a sort of a trading and investment firm as a public company to doing externalized with funds and that process. We went into Fund One thinking like payments would be our key theme, right? We were seeing, this was in, winter, sort of Jan, Feb, March 2024. Bridge had just raised their Series A. There were tons of companies that were sort of getting founded around that time. We were incubating a company around that time that was in the payments and tokenization spaces. We then backed a company in March of 2024, Rail, which then got bought by Ripple over the past summer. We thought payments, like cross-border payments, was going to be the key theme for the fund. And the use cases of stablecoins and cross-border payments, and that's been true. That has been a key idea. Just last night I was on the phone with a company in China, and they're moving payments cross borders from China to LATAM in 1 to 2 minutes, they said. And usually I've heard it fast or slower because of some of the end nodes. And so like that stuff is real. Settlement across borders is happening very quickly with stablecoins. The thing that surprised us in 2025 was the emergence of this cards category. Where, and that was really into the back half of 2024 even, but the emergence of stablecoins, not as a payment instrument, but as a dollar access mechanism in emerging markets, and the use case of stablecoins, and then the connection to the card as a way to spend people's savings balances in emerging markets who are holding, alternatives to a local currency. That's really the story with businesses like Rain and RedHotPay, which are portfolio companies. That sort of took us by surprise in some ways. And we, invested heavily in that category. And that was actually kind of our key category and key theme in 2025. We were, Series A investors in Rain in Jan of 2025. We were Series A investors in RedHotPay in October, I guess it was in December of 2024. Mm-hmm. And I think that became, because of the fat margins of interchange vis-a-vis the comparatively lower take rates of cross-border, B2B payments, that actually became a really interesting category really quick. And so, a couple companies in that bucket went on to raise Series Bs, and then, Rain announced a Series C recently. And so we participated in the the uplift from that and the growth in those markets. And so that was a key theme in 2025. I don't think that stops in 2026. To be clear, I think, that use case is here and can continue to grow. The TAM is essentially, the global consumer who would rather hold their money in US dollar stablecoins than say, Thai baht or Vietnamese dong or Mexican peso, or even would rather hold their dollars on the internet than, in their bank account because they've got a crappy, regional bank who with a bad user experience. And so I think that will continue to play out, and those markets are big. I think it's the themes for 2026. In some ways, one of them is an expansion of that, an expansion of that category, which is like, we think, I guess going into the fund, we thought stablecoins were about, it was a lot about payments and moving money fast across borders. And actually, we're in some ways coming to the realization that, stablecoins are in part about bank deposits, and they're about banking everybody and everything, sort of the internet becoming a bank. And that's been a core realization that I think translates into those card businesses, but I think continues to be true as you look into categories like lending. How do you generate margin or net interest margin on people's savings in different ways? And so on-chain lending, lending and servicing and securitization, which is a sort of slightly different point. So these are some of our key themes in 2026. Equity perpetuals as well. So I don't know. That's kind of how we think.
Yeah, that's great. I mean, that sets the scene here for how you and Galaxy are thinking about 2026, and how you can take a theme and a thesis around payments and sort of develop it, evolve with it. Maybe it doesn't play out exactly how you think it will, but still end up having quite a few wins in a category. And then it sort of offshoots into several other categories. Like you said, stablecoin cards, you end up taking more of a B2B approach with stablecoin payments. Tokenized deposits is something we're hearing more about. Yeah. And so it sort of has grown into, several offshoots that are now positioned to do quite well in 26 and beyond. And
I think the territory is just like really, really rich. Like you can walk in as an investor to a category where you have a thesis and then be surprised in the ways in which the thesis evolves, if the market size is big enough to allow that to happen, and the opportunity set in the frontier of innovation is rich enough. And I think this with stablecoins, that's certainly true. I think lending markets and I think 𝗲𝗄 and 𝗵𝗶𝗴𝗵 really pioneered, and 𝗵𝗶𝗴𝗵 and others really pioneered interesting stuff that now we're going to get that tree start to branch out in those kind of markets, in my view, in 2026, especially as they converge with stablecoins and this concept that people are all across the world, especially in emerging markets, replacing their deposits at their banks with a stablecoin over the internet in a multi-sig wallet, or in a in an MPC wallet for institutions, or just in a hot wallet in MetaMask and whatever. And so I think that's a really, there's going to be a rich frontier of innovation that happens there as people want to get yield on those assets. And then how do you allocate between managers and curators of the yield who create different opportunities? Athena, not to go into an entirely different direction, but Athena is running just one trade, right? Which is the basis trade on Bitcoin. There's a lot of other trades in the world with a lot, that generate a lot more alpha that people have historically been tapped out of and could theoretically use it as a savings instrument. So we're pretty excited for the frontier of innovation that will come and just kind of spiral from here. But that all requires the market being big enough, the regulatory environment being, available for those changes to happen, and the entrepreneurs being, in a position to design things that are interesting. So
absolutely,
that's how I think about 2026 practically.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Tokenization is another interesting area. And I think tokenization merges in some of those on-chain lending categories as well. But like yesterday, our company TenBin announced their seed round. We led their $7 million round. 𝗬𝗍, the founder, he's been in the crypto space. The CEO has been in the crypto space for a long time as a researcher at Sorella, as an investor at 𝗵𝗶𝗴𝗵, Jake, the CTO, at Spearbit. And so these guys have been in the industry for a while, realizing that, okay, instead of tokenizing an SPV, like an interest within an SPV, let's tokenize a position on the CME instead, right? It was in some ways the insight that Guy and Athena had originally, which is like, let's tokenize a position, a short position, a short future position on, Bybit and Binance, and actually 𝗬𝗍's applying that kind of principle to gold and FX, currencies, and then wrapping that on chain, and then that's when it becomes interesting, because you throw it in 𝗹𝗏 and 𝗵𝗆 and Pendle, and that's where you get the composability. So there's going to be a ton of cool stuff. Superstate, another portfolio company, had announced their round early this year. Their Series B, we were a Series A investor with them, and also, followed on the Series B at Galaxy. We've got close ties with, Superstate, and really love the team and think they're really innovating in the issuance of, public tokenized common shares, and at the transfer agent level. And so it feels like a good time, I think, to be a crypto entrepreneur and also an investor in the space.
We had Jim on just a couple of days ago talking about the Series B, talking about tokenized equities, and it sounds like you guys have both sides covered. And as you know, we've been building out this thesis around neo finance, and it feels like there's really two buckets, and it came as a result of the DeFi frontier being so rich that it has now exploded into a tree of all of these categories, which include the RWAs, the tokenization protocols, the stable coins, all of these things all sort of tend to fall into two buckets of quality assets, which is something that we feel like we've been missing for so long. We've got Bitcoin, we've got ETH, now we've got stable coins and yield on those stables, but the long tail of assets in crypto are just not investable. And now we're bringing on equities, we're bringing tokenized equities to the table, and then we've got essentially fixed income, which is the entire other side of the equation, where bringing fixed income on chain looks like stablecoin products built in with DeFi yield sources, but also like exogenous yield sources, so that it's not just rehypothecation and leverage and emissions that is paying that yield. And so we believe that DeFi really grew into this really robust landscape of neo finance. And what that looks like is, a Cambrian explosion of neobanks, which provide the user experience that people are looking for when they're accessing these sorts of products. But it also is the quality assets underneath, which we think is generally going to take the current crypto landscape and turn it into a much more mature, professional, legitimate landscape overall. And so it seems as if Galaxy Ventures kind of has things on both sides, right? You guys have the tokenized equities portion of the equation as a bridge between the legacy financial markets and the modern tokenized financial markets. And then also from the fixed income side of things, you guys, with TenBin are tokenizing some of these ETF positions. And correct me if I'm wrong, but what that does is it provides a stable source of yield as a result of income that's paid via this ETF position.
Yeah. I mean, so TenBin, how it works is they take a position on a futures exchange that's essentially paying you, right? So if they're going long the future, they're getting paid to go long the future. And they actually, one of the things you can do, and not to front run 𝗬𝗍 and the team on this, but one of the things that's interesting you can do is you can actually, because you can, use only a percentage of the full position in margin, you can keep the remainder on chain, earning in sort of low yielding vaults. And so earning, if you have, let's say, 3x margin, you actually retain 66% on chain, yielding in, a 𝗵𝗶𝗴𝗵 vault or something else that's demonstrably low risk, right? And so you're replicating essentially the exposure to gold or Mexican peso or Brazilian real without actually, in some ways you are holding the spot. Like the CME is abstracting all the custody of those positions away from you, like the custody of the gold, which is something that Paxos with their Paxos gold product or Tether with their Tether gold product is like tokenizing and giving to you. The CME is abstracting all that away because you're just taking a position on a regulated, highly liquid exchange. It also brings liquidity to the position out of the box because issuance and redemption is essentially a trade, right, on that exchange. Now, I would say on TenBin, they're not really on the fixed income side as much as they are on the, I guess in some ways they've got the variable yield, which is a feature, but they're kind of on the tokenization. I guess where do they fit? They're neither debt nor equity, right? They're more like commodities and currencies is how I'd visualize, maybe so a third category. I do think, and we will have, further announcements on the more fixed income side where, we made an investment, which I won't, I won't front run ourselves here, but we made an investment in December that we're pretty excited about where there's, some component of on-chain loan servicing, right? So the workflows that you'd see in traditional asset-backed lending are actually getting brought on-chain once you bring like loan servicing, so paying agent, calculation agent, verification agent, these service providers who will actually go in and check that all the like payments are being made to the right people in the waterfall and all of the the numbers are right and and payments are being made on time and administering all of the like fund flows in these SPVs that really power asset-backed lending, asset-backed securitization, like all that can be done on a blockchain, full stop. And then once you bring those flows on blockchains, you can securitize them, you can create secondary markets around them. And so we made a really exciting investment in December on that front. So we're trying to bring it all together, like in one portfolio with some of these, some of these key ideas. But definitely it's been an exciting time, and hopefully it continues to be the right valuation environment and everything else to make such investments. So,
looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Trade on anything: economics, weather, sports, crypto, and more. All on Calci.com 24/7 for the world's biggest prediction market.
You're just gonna have to come back and talk to us about this investment that you guys made in December.
Maybe with the founder. Yeah,
absolutely. Would love to. Yuki, is a friend of the show as well. We were an investor in Sorella. Shout out Yuki. He's always welcome as well. Open invitation. And well, I just a couple of things left is we're going all in on this Neo Finance thesis. It seems as if, the underlying components here, you guys are investing in as well.
Yeah.
I'm curious, give me your brutally honest feedback on Neo Finance as an asset allocator in the space. You're doing a great job there at Galaxy Ventures. So I'm quite curious to get, your unique perspective on this thesis.
Yeah. The bear case or just the
generally just brutally honest, like curious where your head is at and just your perspective on kind of this, this next frontier of DeFi and legacy finance ultimately coming together into what we believe is where there's product market fit for a lot of tokenized products.
Yeah, look, I think you guys hit the nail on the head. Actually, with the term, I will say it's a term of art because I think it'll stick. In some ways, the same way fintech did back in early days. Like we had a view, and I think it's like other people have the view too. So it's not like a unique view per se, but like there was a view in 2022 that we had built really interesting protocols, Aave and at the time Compound and Uniswap and Camino and all these interesting protocols, and there were like very few interesting assets to trade on them, right? Like it's basically like you could trade and move around the assets that represented the ownerships in the protocols themselves. So it was this highly circular phenomenon. But in some ways, a parallel financial system was being built, right? That was different and in a lot of ways better than the traditional financial services industry, where, to move a payment across borders, you need to like get like 6 banks involved, and it's going to take you, depending on what corridors, it's going to take you 3 business days, right? So like clearly we were operating in under like better financial infrastructure, and I think the view and the issue is the quality of assets in that environment were like significantly worse, right? You don't have Apple, right? You don't have the ability to like own a company's equity on chain and move them around in DeFi and trade them and lend them and get an interest rate derivative permissionlessly on them and send it around to your friend across borders. And I think that transition is still happening. We're not by any means like fully there. I think the quality of tokenized assets on chain still needs a lot of work, in terms of, on one hand, the distribution of tickers that are available on chain, and on the other hand, for the wrapped assets, which have broad distribution of tickers, like what you don't really have is like high quality legal guarantees, right? Because you're kind of doing pass through to some Cayman SPV, and and so there's some big caveats to make there, and I think that process is underway, and I think it will happen over time. That'll need a positive regulatory environment. That'll need, when 𝗵𝗶𝗴𝗵 says, like Project Crypto, like I want to bring every ticker on chain, like that's what you want to be hearing. But I think, the Neo Finance speaks to the idea that, finance run on a shared ledger is a better system than finance run on distinct ledgers. Whether that you think about that as bank deposits and, systemically important banks and regional banks for payments, or if you think about that as the DTCC versus the South Korean or Hong Kong stock systems and tickers there, like, and how discombobulated those are with ADRs and ETFs, and so I think there's a belief, at least in our team and broadly at Galaxy, that those things will get fixed over time. There's massive phase shifts underway. In a lot of ways, hopefully should get better for the consumer, and I think it will get better for the consumer. And when those platform shifts happen, we want to be investing in the companies that are, making them happen. And at Galaxy broadly, like, we want to be contributing to that from an institutional infrastructure perspective, and making sure we're helping, some of our clients are banks and large asset managers in the existing world, and we want to make sure they navigate those transitions smoothly as well, right? And so we're not myopically focused on disrupting banks and asset managers, but we will back them. We will back the companies disrupting them if they are going to get disrupted, right? And so that's, I don't know how we kind of conceptualize it. So I think it's absolutely spot on. Neo Finance, you heard it here first. The roll up coined the term. Send it to everybody is basically what I would say.
Get distribution on that ticker, Neo Finance.
Yeah. Neo Finance, you guys issue it on chain. Put it in the smart contract so nobody else can steal it.
You got it, man. Well, it's always a pleasure having you join us. Always a unique perspective. Coming from a bridge that also sits, at the cross section of legacy finance. Like you said, you're talking to banks. You're helping them disrupt themselves before they get disrupted, which I think is something that they certainly appreciate, and we appreciate you coming on and sharing your wisdom with us. So whenever it comes time to announce that next portfolio company, you just join us here. We'll be happy to have you.
Yeah, we will definitely do that. That'll be a good one. I think you'll like the founder is fantastic, so I think that'll be a good episode.
Awesome. Thank you so much, Will.
All right.
Really appreciate it. We'll see you next time.
Thanks, Robbie. See ya.
Cheers, man.